Today is Tuesday, October 18th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials today, Alan, specifically the stock index futures. What are the latest technical signals for the stock index futures? We're up strong again today.
Right. So we have had 2 days of good gains, and we have taken out some downtrend lines, but probably more important than that, there was a 1-day reversal to the upside in the indices last Thursday. And in recent months, the 1-day reversal pattern seems to have more validity, more than it has had in the past years. So this is a very strong signal that there may be some follow-through gains for the stock index futures.
Good news for many. Alan, what reports this week will have the most market moving potential?
Okay, well, it looks like the housing market is where many analysts and traders are focusing their attention. And even today, we had the housing market index expected to come in at 44. It came in at a very weak 38, and that's even down from the 46 last month. On Wednesday, we'll have housing starts anticipated to be 1.475 million. That would be down from the previous month. And then on Thursday, we'll have existing home sales, which are also expected to be down. So I think a lot of analysts, traders focusing on housing, and that seems to be the weak spot in the economy right now.
Is that a good thing, though, Alan, that the economy is slowing down in regard to the housing starts, and does that mean that the interest rate hikes are working?
What it means is that the Fed will probably be less aggressive in raising rates down the road. So in a sense, it's the bad news is the good news for stock index futures. So I am seeing a tendency in the financial futures markets to reflect a less aggressive, a less hawkish Fed. So you're absolutely right in that assessment. A weaker economy is reflected in housing actually is ironically supportive to the stock index futures from an interest rate point of view.
Just one more question, Alan, regarding the U.S. dollar. Why has the greenback underperformed the news in recent weeks?
I think the dollar index, first of all, traders that are in the currency markets have two sets of fundamentals to watch. It's what's going on here in the U.S. and what's going on elsewhere around the world, in other currency markets, other economies. So there's a lot more to assess, and they seem to be more perceptive than traders in other markets. Keep in mind that the dollar did not make a new high for the move, even though the latest inflation numbers were worse than expected. So the relative underperformance in the dollar index suggests that the Fed and other central banks may be less hawkish going forward.
Steve, looking at the grain markets, what's the latest on U.S. and global grain demand?
In the last USDA report, they lowered bean exports by 40 million bushels, and some people think that they're still high by 100 million bushels, mostly due to lower China demand and lower global demand and competition from South America. In corn, they lowered exports by 125 million bushels. Some people think that they should lower it another 200 million bushels due to cheaper Ukraine, cheaper South American prices, and the fact that we're still very expensive in corn. Over in the wheat, they dropped the wheat exports here in the U.S. a total of 50 million bushels, and that number is the lowest U.S. wheat export number in 50 years. Globally, they took down corn demand 6 million tons, mostly in the Far East, and so I think the markets right now are struggling with the fact that at current futures prices, demand is slowing.
Steve, can you speak to the money flow into grains right now? What does the fund position look like currently?
This morning was probably the first day in which the funds decided to change direction. They're buying equities and selling commodities. and they're selling commodities in fear of inflation pushing economies into recession. So from the peak, managed funds have sold 160,000 corn contracts. Index funds have sold 120,000 corn contracts. And the beans managed funds have sold 175,000 contracts, while the index funds have sold 100,000 contracts. And in the wheat, they flipped from a long 25 to a short 25 in managed funds and liquidated 60,000 contracts of corn. So the index funds have the smallest long position in years.
Finally, Steve, what's the latest on global weather and the impact on grain futures prices?
Weather is inching a little bit closer to normal in that by December, La Nina should be gone. And Brazil weather is fine, Argentina's dry, but they should start getting some rain once La Nina fades. Europe conditions have improved a lot. Right now, you're getting too much rain in Ukraine and Russia, and you're getting too much rain in eastern Australia. But our weather guy feels that once we get into maybe a mild El Nino early in 2023, conditions will be favorable for U.S. crops and Northern Hemisphere crops. The only problem we have right now is this persistent dryness in the Midwest has Mississippi water levels record low. And so you're seeing basis levels widen as you can't load barges. And, usually it takes 15 days to go from the Illinois to the Gulf. Right now, there is really no time frame in which a barge can get down to the Gulf. So you get piles of corn, piles of soybeans that are building in the Midwest. Basis levels probably went for corn from as much as 100 over to as much as 100 under. And so all this is because of the dry weather. And there's no rain forecasted for the next 30 days that'll help the Mississippi River. So basically, weather is a negative factor to futures.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.